Hey, good morning everyone. My name is Ram Dhamija. Welcome to my channel. Today is 8th of March and I come here to present my views about the market for next week and how I see the market levels to be and where the markets can head. And also I'll talk about the US markets a bit. Where do I see them going ahead into the next year and why you should have a diversified trade going ahead into next year. So all those things coming up in my video today. So I will first start off with how the markets have behaved over the last couple of days, and then we are going to take it from there. So this is how the markets actually ended up on Friday. Now, if you look at it over here, we have been forming one, two, three, four. There are four green candles that have come, and this was on backdrop of 8 or 9 days of constant negative closing for Nifty, which had not happened many times before. So we have seen some sort of a recovery happening, which is great, and we actually did not test this particular bottom. We came very close to it, which is 21,875 odd we came, but we bounced from there, and now the first resistance is going to be 22,700. Once we cross that, then this sloping line should go down somewhere like this, if you see over here. So we are going to meet this sloping line somewhere over here, which is 23,000. So if we are able to cross that particular level, which still is like a lot of time away, only then we can say this lower low, lower high pattern is broken. Otherwise, if we reverse anywhere before that, then I don't think this 21,800 last bottom that we made also might hold. So it might end up being a severe correction if this particular level is also not crossed. And the first level, as I said, 22,750 odd, that is the first resistance, because the market had taken 10 days support over there. So that becomes a resistance while the market goes up. So we will see how that plays out, because a lot of market participants are still positioned on the negative side, though the open interest has improved a bit over the last week. So we are seeing that the market, even if it opens gap down on bad global news, quickly recovers and goes up, so which is a good sign, and it has stabilized for all these days. So I'm just hoping that that continues and we are able to break this particular trend line. So that is about the market levels per se. Now let us look at how the sectors behaved on Friday, and then I will take you through some interesting facts about what has changed in the market over the last 1 month, 1 week also. I would say there have been a lot of interesting changes. I'll take you through all of them, but this is how the Friday close was. So Friday was a nothing sort of a day. The only highlight probably of Friday was that we opened gap down, but we were able to recover all of it back, and Nifty closed up 7 points, which was great. But if you look at the sectors, this is how the sector's performance has been. Small cap has been making a good recovery, so it was again up 0.69%. Metals, infrastructure, auto, energy, all were up, and Nifty, as I said, was slightly in the green. And what went down? India VIX went down, which is a good sign. IT went down, PSE went down, mid cap 150 went down, banks went down. So banks have actually not fallen too much, and that probably can be a bullish sign going ahead. Now something interesting. This is what you see as the you can see over here. This is the performance of all the sectors over 1 day, 1 week, 1 month, 3 months, 1 year. This is the mutual fund data. Now, if you look at the performance, so this represents the mutual funds in those particular sectors. Now, if you look at it, what has happened in the last 1 week is all the high beta names like PSU, energy, infrastructure, small cap have been the best performers. So you can see they are up 5.66%, and they're almost up 8, 9, 10% from their bottom. So which is a great sign. While the sectors which have performed badly or not really participated were the ones that fell the least. So banking has not gone up, technology is kind of flat. So what we are seeing is a high beta has made a very good comeback in the last 4-5 days, and that is what I say, that when markets actually go up, then these are the high beta sectors are the ones that perform. But now if you look at 1 month data, it presents a slightly different picture. Small caps, as you see, is one of the worst performers. IT I will discount because IT had not fallen even as much as Nifty had fallen, so it was just a catch-up trade that it was doing. But look at this, in 1 month also small cap has been the worst performer, followed by mid cap, right? So although the recovery has come, let's look at small cap, although recovery has come of 5%, so they were actually down 15% in a month, but it is still down. Let's look at the 3 months picture, how the sectors have performed. Small cap, again the worst performer, minus 20% down, mid cap minus 16% down, and the best performer of course has been S&P, so I'll talk about that. And let's look at last 1 year. So PSU has been completely decimated. It's showing a -7, but from the peak, if you look at it, it's gone down tremendously, 30-40% also. And the best performing has been international, primarily because of the US markets. But if you look at it over here, even from a 1 year perspective, you will see that large caps have become kind of flat. They are at 0.55. Whereas if you look at small cap, they are also flat now. So they had gone into negative territory for last 1 year, but now after the recovery, they are kind of giving a slightly positive return. But otherwise, last 1 year returns have been completely wiped out. Okay, so this is what we are seeing in the indices. So the whole point is that when these indices run up, they run up 4-5%. So I was listening to a couple of interviews today. So the small cap rally gave a CAG of almost 40-45% from the COVID lows bottom, and that was the right trade to be in. But if you look at what the delivery of small cap over a long term, they give you only a couple of percentage points more than the large caps. So it is also a matter of when you are entering these. Also, someone was saying that small caps are trading about 2 standard deviations higher than the long term average, and after the correction, they're still trading 1 standard deviation higher. So somewhere I don't see too much value right now, also even in small caps and mid caps. But having said that, they are definitely emerging to be in the buying zone. Okay, so someone is looking at creating a portfolio of stocks, they can have a look. I'm not saying go out and buy, but they can have a look. And some of the very well managed mutual funds, they are down 20-25%. And I think that could be a good buying opportunity to look at those funds. Uh, I will talk about that little later. Now let us look at how the US markets have behaved. The US markets, the S&P VIX was down -1.5, which is about 6%. US 10-year is kind of flat at 4.3. Nasdaq stabilized on Friday. And if you look at the dollar index, now this is the main one for us, it has gone to 103. So that is also one of the reasons why we are stabilizing. Though the FII outflow is not stopping, but if it goes to 100 and below, then we can expect some relief in FII selling as well. Brent oil is at 70, which is good news for us. USD INR is at 87.1, and gold is almost touching all-time high at 29.10. So we will wait for gold to break 3,000. If it does, that's going to be huge. So a couple of things that I wanted to talk about, which happened over the weekend, and then I'll come to my market understanding and analysis. One is that India-US trade deal is about to happen, so that should be good for us, and because it'll soothe a lot of nerves, because we are seeing that whenever US is announcing tariffs on any country, the stock market is going completely dizzy. So if a trade deal is secured with India, then it's going to be good for us. Then coming to the US markets, so I was just listening to Howard Marks interview today. What he said was that US markets, S&P has given a 20% plus returns the 2 consecutive years, only 5 times in the history. And 4 out of those 5 times, the subsequent years have been negative returns. So that is a very a good warning sign, I would say. And also another data point to look at it is that US markets are 70% of world markets, whereas the GDP is about 26%. So that also somewhere will get corrected. So looking at that and the way dollar is falling now, the dollar index is falling, and if the tariffs are imposed, etc., it might be that the US markets might start to underperform the global markets, and it could be very good for the emerging market space. So if the confluence of all those factors play out, then we could look at subpar returns from US equity markets, which have been phenomenal over the last 2 years, plus 20% if you see. So it's a good time to reassess your portfolio, I would say. Anything that is beaten down, like emerging market equities are beaten down now. We saw also what happened in China trade also. China was beaten down for many years, and it has been one of the best performing markets in the last couple of years. So any index, any stock, any sector that is beaten down completely is worth a look. And now emerging markets, especially India, has also fallen 15% from the top. A lot of names are down 30, 40, 50%. So probably it might be a good time to start assessing that and re-looking at your portfolio allocation, because anyone who has US equities in their portfolio would be doing very well. So I always maintain that US equity should be about 15 to 20% of your portfolio. At least it's in my portfolio. And I bought it when the US markets actually tanked on the yen carry trade day. I have been buying, but I bought a significant chunk even during that day when US markets were down 17% from the top. And since that day, I haven't had the need to buy because the allocation has been such that it takes care of itself. So, and also, frankly, you can't buy the US markets right now because the ETFs are trading at a premium. So, if you look at the NAV and the INAV of the ETFs, they are at a 10% premium. And most of the mutual funds have stopped subscription. So, where do you buy the US markets from? So, hopefully, all of that will correct as we go ahead. Once the US markets start correcting, then all this ETF premium, etc., should vanish, is my understanding, because markets are cyclical. When markets are going down, then no one wants to invest. So same probably is going to be the case with the US markets as well. And we are already seeing first signs of correction in the US market. So let's see how that plays out. uh, then another thing that I have been talking about is gold. Now gold has run up a lot, but in all this macro uncertainty, then if gold continues to do well, then we are looking at gold breaking all-time highs. So as I've said before, gold should be 10% of your allocation. One should wait for a correction to happen, and then you should try to balance your allocation accordingly. uh, Another thing that I would like to say is that this is also a good time to build your portfolios. Now, I've been saying this for the last couple of months, that please look at these corrections as buying opportunities. So, because what happens is when markets correct, that time there is a lot of panic and you get a lot of good deals on ETFs, on mutual funds, etc., which otherwise you will not. You will end up actually buying at very high valuations. But when these corrections kick in, then a lot of these mutual funds and ETFs, etc., fall to their standard deviations level. So for example, a Nifty Alpha falls about 20-25% on every given year. This year it fell 35%. Right, last year it did not fall that much at any point in time. Maximum fall was 15%. So yeah, so what I was saying was that if anyone is looking to make the mutual fund portfolio, they can contact me. They can fill the Google form, which is there in the description box. So I help clients make their mutual fund portfolios, and even if you have an existing mutual fund portfolio, I can review that and suggest what are the things that we can look at. So for example, the report will tell you that whether your mutual funds are in the top performing quartile or not, or whether they are in the least performing quartile. Then you can make adjustments accordingly. Also, whether you are overexposed to a particular sector or a particular theme, that the report will tell. So my point is that never waste a bear market, never waste an opportunity. This is a very good time to start looking at your portfolio, start rebuilding your portfolios for the long term. And that is how one can generate significant alpha over the markets going ahead when you deploy funds sensibly during falls. So we have already seen that the markets are down, are up from the down levels significantly, like small cap, mid cap, alpha, momentum, etc. All up 8 to 10% from the bottom that they made intraday. So whenever the fall happens, one should be ready to pull the trigger and construct the portfolios. And markets still are down 15%. Not to say that they can't go down further, but if they do, then it should be utilized as a buying opportunity. And especially when you know that the other asset classes like gold, US markets, etc., have run up a lot. Where do you invest? You invest in the Indian equity markets, which are still down significantly from the top. So that's it from me now. And the next week looks all right as of now, unless we have some major global cues. SGX also closed 60 points in the green. So should be okay, and a lot of it we'll come to know with the open interest, how the open interest plays out. And then yeah, so we are hoping that we are able to sustain this recovery. Of course there's going to be up and down days, but for markets to significantly recover, they have to first consolidate at a certain level, and then from there they can make a base and go up. Also, the FI selling has reduced a bit, which is good. So let's see if they turn net buyers, and that's going to have a good impact on the market as well. So that's it from me now. I hope you had a good week, and I hope you have a better week next going ahead. And I shall see you on Monday with another update. That's it from me now. If you like the video, please do subscribe to the channel, and please do share it with your friends, family, and I shall see you soon. Bye bye. Take care.